All right. Sorry guys, I'm just starting this recording now. You guys kind of missed like 5 minutes of what I was talking about before, but I'm just talking about a little bit of a review and then what I'm going to be looking for, leading into like mid to end of week. I wasn't really planning on trading Monday much, just because, um, it's a new week, right? The market actually is pricing in some volatility, and then we actually have, when is Jackson Hole, Django? When is that again? We have Jackson Hole coming up, and then a couple other things that are big on the economic calendar. So, leading into the new week, I really didn't want to be taking much of anything, kind of just riding out the remaining swings that I did have runners wise. That being McDonald's, the discretionary charts, Disney, right off of that, Q3 earnings gap from 2023, I believe. Yep. Um, Keep in mind that was all a gap kind of towards that COVID low, so that retracement is going to be very important to hold. Um, and yeah, so let's just get into Tesla. This was a really clean trade on Thursday. I took Tesla calls on Thursday for like 130% for a few reasons, right? We were showing really strong, really healthy consolidation right above this reaccumulation range, all the way back over here from like the beginning of summer. This was the whole May reaccumulation. If you guys know anything about like a market maker type of buy model, it's just the lower lows that are being purchased right into a really strong shakeout type of move. This was also kind of tested on like the daily slash weekly trend. And this was a really, really strong volume news gap up, right? This is probably the heaviest volume news gap up we've ever seen within Tesla. We traded 243, almost 244 million shares. This was our heaviest volume ever, I believe. And this was, I believe this might have been earnings. This was 306 million. But if you guys are looking at this, this is the heaviest volume from right over here in 460 days, right? So that's very, very, very notable. That's very important, right? So we always want to look at volume. It's the effort, right? And then obviously, is the result matching that? If it is, we kind of know the intention. It's just going to take a lot of time for for strong buyers that are holding and repurchasing to recollect all the inventory that is kind of unloaded on that as a gain within this whole entire range. It's why everything takes so long, right? So once we got that expansion, we got this really nice move back up to the swing high. They swept it. They actually came out with news again up here. This is why I talk about how news is not random, right? They talk about news where they want the equity to move down, up, where they need exit liquidity or a buyer to match their sell, right? Whatever it may be, right? There's always a purpose for it, right? Uh, Most of the time. I'm not going to act like it's all the time, but we pulled back down, right? So we pulled back down August 5th, Monday. We had a really nice gap down within the overall market on August 5th, but this was right into Tesla's reaccumulation range from May, right? So this is a very liquid spot within the chart. There was a lot of consolidation that was left behind over here. And then we got this really strong breakaway trend, right? So obviously a recorrection is healthy, maybe not giving up the whole entire move and its progress is, but there was really no true strong sell within this whole thing other than this earnings gap, right? So we got the earnings gap, we got a lower high, and then we got a new lower low. The lower low was all just for kind of a really steep, sharp type of 3-day move down the reaccumulation from May. We started to get a really strong tape right off of that range, right? So we go over here. What this looks like, guys, is obviously a gap down, a rip. I'm going to get rid of a lot of things on this chart. I'll just talk about my executions for the trade on Thursday. All right, so I talk about progression a lot, which was this massive gap right over here. And then this was obviously the more important one because I always like to talk about like more local gaps within the chart, everything that's more recent. So whenever we look at this on Thursday, what happened, guys, was we got the rip and then we got pretty much consolidation right on top of the whole entire range for several days on end, right? You're looking at this. This was Monday. It kind of just consolidated into all the way back into like Friday of that week, and then the next following Monday or Tuesday. Monday was a rest day. Tuesday we started to rip. Boom, we get the gap up. The gap up, what is it significant? What is it doing that holds significance, guys? It's claiming the bear gap, right? So this is the whole Monday bear gap where Tesla did see some crazy drawdown right into the reaccumulation. This was a okay, yeah, this was a 10% gap down. That is filthy, right? So if buyers were to reaccumulate every single sell that sellers are unloading once again within this pocket, that's creating more fuel to the point where, okay, they soak the whole entire Wednesday candle. This is an inside bar. There's not a lot of volume. And then they gap it up and hold it above the Wednesday candle. So why do you think my risk was like 207.67 into like the 208 level itself, right? It was basically just these highs over here, along with the whole entire top of the gap being held, right? So we took calls here, 208 like 50-ish, like 208-ish. And then these made a really nice move up into like almost 216, right? So that's an $8 move on the underlying. This was a really nice trade because of the risk to reward. I was basically risking this level once we claimed it, which was these highs over here. And then we took it up for a really nice gain of like, okay, $1.50 of risk, not the biggest deal. And I was actually looking for all the way up into here, but we just started to consolidate in the afternoon. I was like, I'm just taking this. Could have been a 7R trade, ended up being about a 4R trade, almost a 5R trade, with my execution being little retests over here. I couldn't get filled within this whole entire candle. I got some bid fills right here on this pullback. But that's basically more realistically of what the chart of what the trade looked like, I would say. Something that looks like this. Um, with this being my max drawdown, right? Because I don't think a retest and a failure would necessarily bring $1.89 of drawdown, but we'll just say something like that. Probably about a 3.5 to 4.5 hour trade. Not the best trade in the world, not the worst. And then I traded it today. Um, I traded it whenever we got right above that 219 spot because it was this massive gap progression spot from right over here. And then whenever I notice us start to get above that range and then get little tiny retests into it, that's whenever I took my long. So I took my long on like this little wick. I had some on this close. I was kind of skeptical about this not getting over that orb high, right? Because the orb high is very, very important. But once we did get above that 15-minute orb high, and then we kind of just started to flag out into it, that's whenever I was like, okay, I'm basically break even here. I filled some more in the bid right over here, but this was all just the general range in which my average was at. And my risk was kind of off of that too, right? So if I figured, we're not putting in any sort of high or low for the day, for the afternoon, I'm probably just going to be cutting Tesla, and then I'm going to be looking at this thing to get all the way up into 225, right? So it's not the best trade in the world by no means. It's not the worst trade in the world, but we don't really have any crazy, crazy setups in the market for the time being. My risk was looking something like this, right? So here's a 225 target. Here's my risk of like $1.50. It's a 3.5 hour trade, nothing too bad. I'm very, very picky about everything that yeah, Fed and FOMC speeches tomorrow. That's what I didn't even really hit much of a scan because I knew there was some crazy stuff going on, and I was really busy yesterday, and I was like, you know what? I'm probably not even going to be trading much on Monday just because we have a lot of shit that's going to be impacting the market. So it's like, I'm not, the premium was so garbage today, dude. It was so bad. Um, I don't even know why I like attempted to open up a position, but it is what it is. I don't really care. Um, so yeah, that was a Tesla trade, guys. About a 3R, I would say 3R minimum if it hits 225. If it don't, it's going to be a failed trade, probably a puny loss or a break-even trade, depending on what the morning looks like tomorrow. So I guess we'll see. Um, as far as what I'm looking at for this week, we need to, we probably need to like wait for things to go by. We have the Jackson Hole, I believe, on Friday. Jackson Hole's Friday, I believe, the Django. And then we have minutes on Wednesday. Yeah, no, you have that backward. You have that messed up, I believe. If anybody can correct me, that'd be great. But I believe Jackson Hole's Friday and FOMC minutes is Wednesday. It's the only reason I'm actually overnighting the Tesla is because I do think, now this is all kind of speculation, guys, but whenever we have binary events, whenever we have liquidity driving events, it all depends on the context of the chart and where we are in the charts, right? Whenever you go to the indexes, what we're doing is we're filling a lot of these bear gaps, but I do think one of these binary events is going to be used as a liquidity driving type of event. What I mean by that is there's obviously counterparty liquidity as well as like, there's buyers and sellers. That's as simple as what I can put it. Um, I do think one of them is going to be pulling us back. I don't know which one it's going to be, and it's kind of hard to tell with like things like FOMC minutes. Um, but I don't know. I guess we'll have to see. See, I don't really want to play short. That's what I mean. Um, the short's kind of off the table for me for now. So I'm gonna go take a look at some other tickers that are kind of nice. I'm probably just going to be buying a little bit of time on some of these that look good. JD is one that popped up on my scan that I did for a little bit last night. It's a China name. It's actually really nice just because China in general looks relatively solid. Um, we got this really nice power earnings candle. Uh, it's trying to break over this like 29.17 level that looks relatively critical. Um, dude, I just don't like trading this one, but it doesn't look bad. It definitely doesn't look bad. I think it needs a little bit more time to start playing out, but it is something that I do have on my focus list. I'm gonna go over into the sectors and talk about some of these other trades that I do still have and that I do feel good about and potentially ones that I would keep my eye on for a re-entry because I'm going to be taking full profit everything that I have out of Disney here soon. I've been all over this ticker, right? And what I meant by the Q3 earnings gap was right over here. This is the COVID low down here, guys, right? So you're taking a look over here. This is March of 2020's low, right? That's 79 bucks. We pulled back into 84, ever so slightly above. We got this really, really nice, strong rip on Disney that lasted quite some time. And if you guys know anything or pay attention to any of my videos that I talk about, how do accumulations behave, right? They behave from where the preliminary range of accumulation happened. They behave from the low that sellers failed to take out and base and hold, meaning the low that was broken beneath and then the accumulation happened again and that was the bottom leg, right? So it would be something like this, right? It could work in any way. Not every single schematic is the same, but say for example, you have a really strong accumulation, it goes to swipe a swing high and then distribution happens at that swing high and then it takes out the swing low and then it goes on for a super nice run. So if this started to distribute again, then I would be looking at the preliminary range of accumulation, especially if it had the preliminary low of what the initial low, the initial swing low that was put in place of where the accumulation started, right? So it would look something like that. This is the spring, this is the shakeout, this is the bottom, that's the terminal shakeout, and then that would be like the preliminary range of accumulation, right? Because it always happens kind of like accumulation, shakeout, pop, reaccumulation, and then go. Tesla was a really nice example of that I just did describe. So that would be something that I'm like talking about. This isn't the prettiest drawing in the world, but I'm sure you guys know what I mean. Um, So whenever you go back and you take a look at this, that lines perfectly up with like, obviously this is just one massive support, but this is right off of the Q3 gap fill. This is a power earnings gap that kind of started the Disney run. This was this was what was this? 51 million volume, 7% on the underlying. Really nice volume. And then we got really, really, really nice volume. We actually did fill that gap and we kept pulling back lower and lower and lower. And what really caught my eye down here, guys, was the hammer candle right after earnings, right? So earnings actually was a gap down, a retest into the gap, a failure, a close near the lows. The next following day, what happened was we gapped and then kind of consolidated and had a red to green type of move, and then we just kept consolidating, putting in higher lows, putting in higher lows. I thought we would break down one more time. We didn't. We gapped up, had a really nice strong tape. I took it right above the progression level at like $88, um, with like my risk being towards the opening print on the dated position, and then the $88 level being the risk on the closer positions. So this is a trade where, okay, I'm going to be looking for this thing to start holding like 90 bucks. I'm going to look for it to get over this level right over here, 91.67 into like 92. If it gets above like that general range of like 30 cents, I'll be looking at this to then get to 93.08, 93, to go fill this little overnight gap and eventually start getting up into this resistance towards 94, right? So when you're thinking about this, like, oh my gosh, your risk was at 87.20 right off the opening print. So basically $1 with $4 of reward. That's a 4-to-1 risk to reward, right? So we'll see how that one plays out. I don't plan on selling anything that has time on it. I sold a lot of the McDonald's that has time on it. There's a couple other charts that I do really like those, so I'm gonna get over those. AVGO. I talked about this one on the video that I made the other day. Um, I really like this one because one, this was a really nice, what it looked to be like almost like a trapped side where a lot of people were off sides from this weekly print. Because this was the initial breakout retest. It never got the retest. It just got this really dried up volume into a really strong breakout at the beginning of June with a lot of volume traded on this week, right? This was the heaviest weekly volume that we saw all the way back since like this, the beginning of December, right? So this was a very critical candle to obviously pull back into. Whenever the semiconductors started to kind of distribute, AMD lost a lot of strength. We had some corrections recently in some other ones like Nvidia down into like 94, 95. So this was a range in which, okay, whenever they get back above this massive breakout level, they're probably going to squeeze out any sort of panic sellers, panic shorts, people who want to liquidate anything that they have short wise within the name, and it's going to see a really nice relief trade. Basically, what I was looking for was like this level at 160. It moved there like butter. I had other long positions, so like I said, didn't catch it too much on my mind for the time being. But however, we have this gap up here that was left untested, right? So this was the whole gap. We got an inside bar right off the gap. So if I was actually trading today and focusing, I kind of just slept in, got up, and then went to a property and started. I got to fix up this property so it could get rented out, or I'm losing money on it. But whenever we go into, let's just say, doesn't really matter if you guys take like the wick or the close if they're relatively close to one another. But just like the general gap is like where sellers are making progress. That's all you really need to understand. Okay, so you go to the 15, you could start seeing and saying, okay, there's an inside bar right over here on Friday. I'm looking for this to potentially start expanding right over the Friday high or just holding the 163 spot. If it wants to kind of push down into this gap, by all means, go ahead and do so. Whenever you're looking at this from like much, much, much wider time frames, you could start seeing how it's getting above like hourly resistances, hourly lower highs. You have this gap that was obviously acted as like some sort of resistance as well, right over here. That's kind of aligning with the Thursday low. So this was a really nice long opportunity, taking risk right off of the Thursday low. My plan would have been to kind of accumulate this down into 157.70, but unfortunately I didn't catch any position on it. So I'm going to be watching this one. It's going to be a really hard week, man. It's definitely going to be a hard week, but I'll be watching this one tomorrow for some sort of intraday trade. If it wants to kind of hold above like the Thursday high, the Friday high, or if it wants to pull back, maybe hold discount. If we get a swing high established tomorrow, maybe I could start pulling fibs from like here. Maybe it gaps up to here, or maybe it gaps, I don't know, maybe it puts in a swing high in pre-market, then it sells off into the open, and then I catch some sort of discounted higher low, and then I take this thing all the way up into this gap. That would be perfect, right? I don't know if that's really going to happen. I'm actually super upset. It got caught that kind of close, 166 into 168 almost, which really messed up the trade for me. Because I was honestly looking at this one heavily for tomorrow. But yeah, I don't know. We'll see where this one goes. This was just a really, really, really nice setup prior to that close, honestly. That close was really, really brutal in terms of looking for the fill that I did want on it. But it is what it is. Like I said, was planning on it being slow to start the week anyway, so not gonna get too mad about my missing that stuff. As far as like consumers go, other discretionary names, nothing really looks too clean right now. There's no attractive fills within the market. I did talk to you guys a lot about PayPal, um, that I talk trading with like on the side. You other newer people, I don't know if you guys heard anything about PayPal yet, but this was a really, really, really nice trade today. And I've been wanting to get my hands on some time over here. All I really have with PayPal is commons, but I've been extremely picky with my trading in August because, like I said, I mean, there's not a lot of charts that really really show their hand to me in my opinion right now. I mean, like I said, I nailed the bottom in Nvidia, QQQ longs. I nailed the bottom in all these ranges over here, but or down here. But whenever you're buying under that 100% plus 100% plus VIX, it's a big, big, big problem, right? Like I was only up 100, like I caught a $15 long on Nvidia and I got like 130% with like really, really not that much time. Like it was way less than a month. I think it was 2 weeks out. I think I caught like a 15 something at highs. It was like I want to say $18 and I was up like just about 200%, right? So you really have to start realizing some wins whenever you understand volatility by strike is what matters way more than the vol for the time being, right? Whenever you're buying options under that implied vol, you have to realize wins or you're going to get absolutely smoked. So I included a little bit what was going to be in the scan. If the market does want to sell off, IWM does look very attractive to me. There was really low volume there today, and this all just looks like a really shitty pullback for a lower high. If you want to take a look at like swing low to swing high, you could start looking at like a golden pocket short, which is right off of this gap fill. To be exact, it's like 216.50 range. So if I found a seller up there, I'm taking it, right? It would just be a simple boop, boop, catch a lower high right here, maybe risk that high, take it back down into here. If it starts failing that, I'm looking for the gap. So guys, I mean, if price action simply just looked like this, short, entry, risk, target, there you go, 3.5 hour trade, right? If it wants to move lower, it wants to move lower. If it doesn't, it doesn't. But you start getting into things like down here, you're looking at like a 6 hour trade, right? And this isn't even the best lower high, right? You start looking at something that's like, oh my gosh, this hourly looks horrible. Boom, boom. It's a 6 hour trade, right? So that trade should pay for like probably 7 or 8 losses. So that's one. that is also going to be on my radar is IWM. It's hard to talk about this one because it's like the risk to reward just looks so bad when I look at this chart. It just doesn't it not look horrible? Like it just looks like a terrible trade. I need to pull up my scanner, but I don't really feel like doing that right now because I'm not like really planning on doing a lot for I'm not really planning on doing a lot until we kind of get these things moving by. But but this chart, man, the Django, this was a really nice long that you nailed today, but I'm so glad I didn't take this because, well, I mean, I was thinking about taking this, like, not on any sort of pullback because obviously pullbacks, intraday pullbacks in this big of a weekly level, if you're doing that, you shouldn't even like have a brokerage. I'm not trying to be a dickhead, but like if you tried to long an energy pullback today, you are horrible. Like you have no sense of you have no clues of common sense. Like I'm not trying to be an asshole, but yeah, I mean this is just a one and done type of trade. You guys got to understand the intention behind the trade. Like sometimes it's a one and done type of thing, sometimes it's a continuation type of thing. This is a one and done, right? This is one massive weekly level, right? And it's been a resistance for how long now, right? There's no promises that this gets the continuation. So that was a really nice trade you had there today, Django. It's actually really, really nice. Whenever you look at this on like the 15, it was like, well, it started to look attractive intraday, but then I was like, dude, what am I like? What am I even thinking of here? Like, there's no execution. I'm trying to pinch in a trade where I'm taking this on like what, like a maybe a resistance break. Meanwhile, it just looks like a simple failure in a resistance. You know what I mean? Like, it just looked terrible. Is this going into distribution? I have no idea, and it's more dependent on what the market brings for us with like Jackson Hole and stuff like that. I mean, nobody on earth really knows what's happening with Jackson Hole. I personally think the market pulls back, but nothing really looks too bearish right now. So that's just more of a speculation type of thing. What I'm more or less just going to be focusing on is like the the names where earnings can get by. Maybe they could print a really nice, strong, clean earnings setup. If they can't, there's really nothing that I like. I'm focusing IWM. I'm focusing Tesla. I'm focusing potentially Apple short. And Apple will likely be my short rather than the actual tech basket itself, just because the chart is starting to look absolutely terrible. I always have MMM as some sort of like short-term breakout trade if it looks really strong tomorrow morning. Um, I have some healthcare that's on the table, but yet again, gotta wait for that kind of stuff to start playing out. And other than that, guys, there has been nothing really that I have. There's been nothing really that has been like super, super clean. I don't know. Do you guys see any tickers in the market that look like standouts? Because I feel like I've nailed all the standouts that have really been there. I mean, KHC is a consumer that looks relatively decent. Could potentially take this one. I don't know if it's going to be necessarily worth it, but huh. Yeah, I mean, I could take this one with a stop underneath this day or a stop underneath this close. Definitely. Definitely think this one can. I mean, if this thing rips to 38.65, that is a disgusting trade. The volume is there. The volume is totally there, and it's not a name that is extremely liquid. It's not a name that gets like super. It's not a very liquid options chain. You don't get a lot of like fuckery in terms of like OpEx volume and stuff. So this could definitely be a very, very, very clean one. And the only other tech name that I do have on focus is going to be this one right over here, Google. Um, is that like your MO trade? It would be, yes, it would be something similar like that. I'm very interested in what Google News is hitting next because they've been hitting news down here in this range for quite some time. And they hit it, I believe, at the beginning of August. And then everything just died out on volume. And then we got this really heavy volume wick where it had like this really nice strong recovery on Wednesday. And then it just started getting this really slow grind higher with no seller off the top. I do think some sort of campaign's building out here. And if you guys want to look at something where, you know, a quote unquote lagger, um, sometimes laggers work, sometimes they don't. But when you have this level of consolidation where the range is kind of wiped dry of volume and then it starts getting above that spot, that's whenever you would want to virtually look for, okay, did they accumulate enough inventory within that said spot to be able to just send this thing higher since they have so much inventory on hand to just be able to send this thing higher into like effortlessly into like these gaps up here. That's what happens with footprint candles. That's what happens with like these candles that are just disgustingly large with like trans so much volume kind of poured into the market. It would be a candle like this, right? So, what is that candle going to bring? I think it could bring a very effortless move higher, and then I'd start looking at like names that are kind of behind, right? Those being like Google. We do have a low of day that is put in right off of the gap down candle, which actually tested it to this today, and then had a really nice strong close. I could be watching Google tomorrow, but yet again, why would I really be trading and risking my previous gains on really nice charts that I spotted over like C plus setups? Like if you guys take a look at like any decent trader on Twitter, like they had overnight positions and like some swings that they closed today and like just got off. Or they scan the market and they look for some things and then they're just preparing for trades in the future, right? That's really all you could do is use this time to then be prepared even more for later. Um, there isn't any. Is there any charts that you guys found that you like thought you really really liked, or am I just like I don't know? Maybe I'm being a little bit too picky. I don't know. I do not know. I do know that short interest names have been high short interest names have been looking really, really clean. If you guys didn't know, I have really, really liked the AFRM weekly chart, but there's just too much names with earnings in the way, too. Like that name had earnings in the way. Whenever I was going to look for a scan, it had earnings in the way. I get real picky about that kind of stuff. I don't want to deal with that. Um, There was a couple other ones that really had some shit in the way. Can't really remember them, but yeah, I mean, with that being said, the risk to reward on a lot of the logs is really, really, really unattractive. Oh, I want to go over Apple. That's my other focus. So I have Tesla, which I'm actually already positioned in, AVGO, Google, and Apple. Um, AMD was really, really, really nice dip buy. I actually bought commons there. I don't know if you guys see me with like my retarded tweets at times. Whenever I say like you AMD bulls are going to upgrade to cream of mushroom and get off your Chef Boyardee after you buy this dip. I said that down here. I mean, it's a very simple dip buy, guys. I mean, does this look does this look confusing to you? It's quite simple. Um It got hit with volume today though, so there's definitely volatility to take advantage of like on an intraday scale. But it's getting worse and worse. It's getting really bad. Microsoft's been trading like shit. I don't even know what ever happened to that thing. I really don't. Uh, Netflix has just been going vertical. I really don't even care about that one. Um, yeah, I mean, there's really, like I said, like when you look at these charts, there's really nothing within tech. Is this a red to green move? Yeah, I mean, SMCI can do something crazy. It definitely can with like a really aggressive undercut from this like support back into like a retest and a hold and a go. I definitely think this one has a lot of juice in the tank. The weekly chart's starting to look quite attractive, other than this like this candle right here that's busting my balls. But yeah, SMCI looks definitely decent. It's just like, ugh, the name can trade like absolute garbo too. And it's a $623 stock. Like the premiums get a little spready at times. Uh, the premiums move like crackheads. Like it's just like not the most fun thing in the world to be trading. Not gonna lie. We did have PanW earnings, I think. Whatever happened to that earnings? Don't really care, but can we hit a flush play? Let's close everything out. PanW revenue 1.2. Okay, it was a double beat. Whatever happened? What was the implied move? Does anybody know what the? Oh, this could be a flush play. Yikes. If you guys don't know what the flush is, it's whenever you have an implied move on an earnings report, so the options premiums respect that, they're priced at that, and when the stock makes no move either way, plus or minus uh, implied what the implied move was. Sorry, I just had like some serious ADD. I got a phone call. So yeah, whenever the implied move isn't met for sales from like, sellers or buyers, it doesn't move up or down what the implied move was, then the premiums get absolutely crushed tomorrow, especially if the implied move is large. And then the actual move is very small, and then you could really start to take advantage of like those premiums on like a breakout, say. Even if this thing were to gap up and move up from like 343.50 and up above like 345, that's nothing. So it could be like a simple, home run stab at like a 345 break and retest calls right on the flush. Even two 5 minute green candles, guys, on a flush trade with weeklies can two 5 minute candles that are green, that are a few dollars of a spread, can, you know, pay you 4 or 5 bags, right? So the flush is very useful if you are responsible. I did it with McDonald's. I did it with Velo for like 2,500%. Did it with McDonald's for 1,700%. I'm not trading crazy size on that by no means, but it's definitely useful. And no, I don't act like I'm some sort of Chad whenever I catch a flush play. It's basically like it's almost like arbitrage. Not that, but like it's almost like it's almost like being a gambler, but having way more odds in your favor as a gambler because the the casino is like giving you a deal. Yeah, like I'm him flush trade. Like I'm not like I don't want to sound like I'm on like I'm king of FinTwit. I'm him, bro. 1,000% gamble, bro. Oh my gosh, I'm so good. That's why I don't even like bother to like talk about my huge trades anymore. Like I get way more proud when I have a 15% risk tolerance, and that 15% risk tolerance is netting me like 100% plus, right? I probably had a 20% risk on that trade on Tesla last week, even intraday, 130% return. right? So it's like, dude, you could be horrible and hit one of those and you'll be good. Just all about following the plan, man. You gotta find a plan, stick to the plan, make sure that plan is realistic, follow through with the plan, and then don't touch any button until the plan's done, right? Until your trade is invalidated, until the trade is at target, and that's those type of trades where it's like, dude, your target is a move where it's 5x more potential than what the loss would be. It's like, dude, that's awesome. I'm gonna stop the recording now.